Subprime mortgage loans are loan products that charge a higher interest rate and increased fees over prime mortgage loans. Generally, people with low FICO scores have a difficult time qualifying for traditional prime mortgages. Because of this, the subprime market was developed in order to provide people with low FICO scores a means for purchasing homes. FICO stands for Fair Isaac Corporation, the corporation that calculates each person's creditworthiness and assigns a numerical value to that creditworthiness. Although the formula itself is considered a trade secret, it is based off factors such as employment and residential stability, amount of available credit, and financial obligation records. There are 3 major reporting agencies: Equifax, Experian, and TransUnion. These companies also have their own formulas for determining a person's creditworthiness. However, the FICO formula is considered to be the industry standard. A low FICO score almost always indicates a poor history of paying bills. Although a prime lender will generally be unwilling to take the risk that a borrower with a low FICO score presents, subprime mortgage lenders offer subprime loans to individuals with less than desirable credit. The subprime market offers loans to people with poor credit histories at interest rates that are higher than those extended on a prime mortgage loan. The higher interest rates associated with subprime mortgage loans reflect the additional risk that a subprime lender takes on by lending money to people with poor credit. Further, the fees included in a subprime mortgage loan are higher because of both the risk and increased marketing costs associated with a subprime loan. This is how the industry justifies the increased cost of its loans. As anyone with a mailbox can tell you, the mortgage loan industry markets aggressively. Oftentimes, promotional materials will even encourage property owners to refinance for an even higher amount than is currently owed on the mortgage. For example, by taking cash out of the home's equity, marketing campaigns state that a homeowner can consolidate other debts or even take time off for a vacation. At one point in time, subprime mortgage advertising even encouraged people to borrow up to 125% of a home's appraised value. Now that's nuts. After the falling housing market, legislation has been passed that has tightened the underwriting and disclosure requirements associated with subprime lending. This legislation requires that consumers be better informed about the details of subprime mortgage loans before they sign their name on the dotted line. This all being said, people with low credit scores aren't the only people who have been caught up in the subprime market fiasco. It is important that you do your research and shop around for your mortgage loan. Don't get caught with high interest rates and poor terms when you may have been eligible for a prime mortgage. These factors include the size of the down payment you take, the ratios of your house payment to gross income, total monthly debt to gross income, and the willingness and ability you have to provide additional documentation. Although it may take longer for you to get approved for a prime mortgage loan if you have a middle-of-the-road FICO score, the cost savings are enormous when compared to subprime loans. It is important to know that even a 1% difference in an interest rate can increase your monthly payment by hundreds of dollars. Further, practically all of that amount at the beginning of your loan term will go towards paying off interest and not the principal of your home. Many financial experts suggest that you should begin shopping for your mortgage loan through prime lenders. This holds true even if you have a FICO score that may require you to explain reasons behind late payments found in your credit reports. This all being said, different lenders have different underwriting requirements. Just because your application is turned down by one prime lender doesn't mean that a different prime lender won't approve your application. Whereas if you qualify for a prime rate, but apply for a subprime mortgage loan instead, you will most likely be given the subprime rate instead of a prime rate. There are cases where a lender may not tell you if you are eligible for a lower interest rate simply because they will lose out on a larger commission. Make sure you are aware of this when applying for your mortgage loan. Lastly, federalmortgageservices.com has a nationwide network of mortgage lenders that want your business. Our application process can get you in contact with some of the best lenders and brokers in your area, providing you with great rates. Our loan quote information form process is fast, easy, and free, and you can apply from the comfort of your own home. Federal Mortgage Services, financing you need for the home of your dreams.